Hello, I'm David Chaston with 989, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news that markets now accept rates will rise. Financial markets are calm ahead of the first increase in American interest rates in 9 years. The Bank of International Settlements has called it an uneasy calm for this morning. It also called for higher policy rates, saying that current low rates fuel market instability. The final piece of the puzzle was put in place on Saturday when the US non-farm payroll report was released. Payrolls rose fractionally more than economists had expected, and wages increased 2.3% in the year to November. Together, these represent a string of positive monthly results that started over a year ago. In that time, only 3 rogue low months have been reported. Stock and bond markets now accept the rise. They had no reaction to this data, rising steadily during the Friday trading sessions. We also saw rises in commodity prices. Copper and aluminium prices were higher. Gold jumped $25 an ounce. But oil fell for its own special reasons. But those parts of the global economy that have been fueled by low rates appear to be on borrowed time. Higher rates depress asset values, and we are starting to see asset values fall in some early warning sectors. Companies financed by junk bonds have seen capital values of those bonds fall. Some emerging markets that have borrowed heavily when money was very cheap look very shaky. Brazil is a flashpoint. The transition to a more normal price for money and credit will not be easy. And it will not be helped by resolute Chinese moves to cut back on industries that have severe overcapacity. And later this week, the Reserve Bank of New Zealand will assess its policy rate. Most professional economists pick a cut to 2.5% from 2.75%. However, Governor Wheeler has to assess whether a move like that would actually make any difference. The rest of the data due out this week is relatively minor, except perhaps for the REINZ results for November. And we get Chinese trade balance data on Tuesday, where expectations are for a smaller surplus. We got the equivalent US data over the weekend, and that showed little change to their trade deficit. In New York on Friday, the US Treasury 10-year yield benchmark consolidated its higher level and starts the week at 2.27%. The US benchmark oil price is down and, importantly, is now under $40 a barrel, while the Brent benchmark is at $43 a barrel. OPEC failed to agree on an oil production ceiling over the weekend at a meeting that ended in acrimony. Iran said it would not consider any production curbs until it restores output scaled back after years of Western sanctions. The supply glut continues. The gold price, however, is up strongly, now at $1,085 an ounce. The New Zealand dollar has also risen broadly against all comers. It is currently at 67.5 US cents, 91.9 Aussie cents, and at 62 euro cents. The TWI starts the week at 72.6, a 5-week high. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.